Does manual treasury management and operations have your crypto business stuck in the slow lane? Scale up and speed ahead with Fireblocks, the #1 platform for crypto operations and trading pros that makes custody, settlement, and rebalancing quick and easy. Visit fireblocks.com to learn more. This episode is brought to you by Coinbase Prime, an integrated solution that provides institutional investors with an advanced trading platform, secure custody, and prime services to manage all of their crypto assets in one place. Futuristic companies like Tesla and MicroStrategy have used Coinbase's comprehensive investing platform to execute some of the largest trades in the industry. Learn more by visiting coinbase.com/prime to get started today. I'd also like to give a shout out to Cross River. Whether you're a crypto exchange, NFT marketplace, or wallet, Cross River's integrated API-based platform provides the payment solutions you need to grow. A CryptoFin Industry Award winner and an early partner for companies like Coinbase, Cross River's tech stack supports crypto partners and enables real-time money movement for consumers. Welcome to a new world of crypto-friendly banking at crossriver.com/crypto. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblockcrypto.com/terms-service. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, Director of News at The Block, and today on the show is a legend. We have Jonathan Cheesman, Head of OTC and Institutional Sales at FTX. He's also building out the FTX Access platform. We can talk a little bit about that, but basically you can think of Jonathan as this bridge between traditional finance and the crypto world. His background is very much institutional focus. He was at Goldman, HSBC, and Barclays, and now again at FTX. He's in London. John, feel like I just saw you. I can't, you can't get rid of me.
Yeah, it was a great time meeting in Paris. It was funny. On reflection, it reminded me of my first experience of a crypto conference, which was 2018 MIT Blockchain Week. And my word, have the attendance of crypto conferences changed in in that time period.
I know. I mean, it's definitely a bit more buttoned up. It kind of makes you a bit nostalgic for, the simpler times of, instead of fancy black tie dinners, maybe a bit more dodgy dive bars.
Exactly. That would be more comfortable there.
Yeah, this space has just grown so fast, and your role is kind of indicative of that.
Yeah, absolutely. No, it's been coming up to almost a year at FTX. In one way, it's gone really fast. In another way, I struggle to remember my life before the 24-hour Sam entered my life. But, we have a great time. We've accomplished a huge amount in a very short period of time. And yeah, it's an incredible bunch of people to work with. And yeah, good times.
Yeah, I remember the story that we put out when you joined back in May 2021. Yogita wrote it, which is a great badge of honor. She's a machine. But so what does the business look like today that you were plucked to run?
Yeah, so when I joined FTX, they made a joke that I was head of boomer relations, which was, a very young group of people kind of acknowledging that institutions were trying to get into the space, that, there were conversations about capital raising with the investors. There were conversations with banks about how to interface with them as they sort of struggled to find their way into the crypto space. And someone, I guess, with my background helped on that front. And I mean, it also really helped from an FTX perspective that it was my second try at crypto. I worked for, most of, most of 2017 and 2018 at Distributed Global, a digital assets hedge fund that was based in New York. So, so I was kind of a bit of a hybrid between a foreign exchange salesperson on Wall Street and a crypto native. So, so that really helped me, immerse myself at FTX. I'd say the majority of our flow is still either from retail or institutions that are high frequency trading firms. FTX's tagline has always been, built by traders for traders. And I think that is true. The advantage is the liquidity provided by futures markets, which, is most appealing to investors that are sensitive to liquidity. So sometimes the, very buy and hold investors, might want to take a kind of self-custody approach or a, external custody approach and really only transacting very occasionally. We've made some great steps recently at FTX, getting registered and licensed in the Bahamas, in Cyprus, in Australia, and in Japan. And that really has kind of increased our ability to market to more traditional investors. I'd say, honestly, I remember the first time I came into crypto, Mike Novogratz talking about how the herd was coming, and we were waiting for this stampede of institutional money to get to understand the magic of Bitcoin and other cryptocurrencies, and realize that this was, hopefully we'll come on to macro later and talk about, some of the use cases and why I think crypto should be so appealing to any investor. And we were hoping that the light switch would come on and the herd would descend in 2018 and save us from the bear market. That didn't transpire. And I'd say even still, 4 years later, institutional investors, especially those regulated in the US, have significant challenges, to hold digital assets. The main reason for that is digital assets are bearer assets that don't have end of day reconciliations. They don't have particularly active insurance markets. And that makes people pretty nervous about their fiduciary obligation to safeguard LP's assets. So one of the big trends we're actually seeing at the moment is more traditional funds actually launching smaller internal funds with partner capital, to kind of test run and prove that they can run these strategies before opening them up to LP capital. So that's pretty interesting, and I'd say we're working with probably a dozen of funds that are launching those kind of strategies now.
Interesting. So there is that kind of the bread and butter of the non-crypto FTX Access client.
Well, FTX Access is fairly new, and it's actually designed with a number of different opportunities that we're going with. One is going to be research. FTX Research is going to fall under that. We're going to work on a curated blog, keep it open source, keep it open-minded, very kind of crypto community feel to it. But, we will have a few key contributors. We'll be releasing the news soon, but we've hired a kind of macro market strategist. We're going to be working with a technical analyst, and also a number of different research organizations, just to try and, give a really broad approach to research. We launched our first ETP last month, exchange traded Solana index. That's available in Europe. We're going to be doing the same with a couple of other individual tokens, and we're also going to do that with a couple of index thematic baskets. These are pretty cool because institutional investors that aren't comfortable holding digital assets themselves can hold these exchange traded products much more easily. The other space we really want to get into is more bespoke indexes. So, XYZ bank in Germany decides that their clients would like access to, it could really be anything. Simple Bitcoin, maybe staked Ethereum will probably become a big theme into the end of the year. And they want you to structure that like a bond, have it issued by a bank that they have, that they see the credit as acceptable to. Means they don't have to do any of the custody themselves. they book it just like a fixed income product. I think doing that on a bespoke basis with large clients will be a pretty big business for FTX Access.
Yeah. So basically, research, asset management, and helping large institutions access liquidity in the broader OTC market.
Yep, exactly. Where at the moment we're making some big strides upgrading our OTC portal, so there'll be more functionality on there for people to deal OTC. And we also do provide, kind of a more white glove approach to both onboarding, which really is the biggest pain point, and also execution. So, it's doing a bunch of different things, and really it's just an acknowledgement of, we see the demand coming from so many names, and similarly, we can also see the challenges they face, and we've kind of worked through it with a bunch of large names that were very motivated to do it, and we can kind of use that experience to help others do the same thing.
Is there a bit of caution out there at the moment? I mean, Bitcoin's up today, but it still feels like we're stuck in the doldrums. And I'm wondering how that's impacting the motivation of larger market participants to put on trades in size, aside from, of course, Do Kwon, who is just perpetually long.
And sounds like Justin Sun might be entering the stablecoin race. So we'll see how that plans out. No, I'd say that's definitely a very valid point, and I'd make kind of a few things come to mind on it. Firstly, this is very different to 2018, where I can actually remember meeting one of the kind of most prestigious hedge funds mid 2018, and them telling us the story of, oh my God, we almost bought in January 2018 and we'd have paid the highs and we'd have looked like total idiots, when in fact those trades would right now be a long way on, all over 100% on side. But that, and I think in 2018 that was definitely the feeling. Institutional traditional investors still felt there were existential risks to crypto. I think that's very different to now. It was actually strange last year. I'd say around Labor Day, something happened over the summer, and the large investors I was speaking with, they had a number of reasons as to why they weren't doing crypto. Could be custody, could be a variety, didn't have enough time, resources to dedicate to it, whatever it was. And it seemed they came back after summer and just decided, like, that's not a good enough answer. These digital assets are here to stay. We need to figure out how we can access this market. And there are significant challenges to getting there, but we just, the fact that it's hard isn't a reason not to do it anymore. And I've actually been quite impressed with how resilient that kind of has been throughout the last year, because we have had significant price volatility in both directions. For me, I think most acknowledge that there are some structural tailwinds for crypto. One just being kind of a sort of technology piece, which is about digitization. It's about companies adopting a Web3 strategies. It's about individuals wanting to have control of their own assets and being comfortable, transacting via, crypto, NFTs, however you want to piece that together. The other structural piece that I think is growing now is this idea of, one, like the death of kind of fiat currencies, because there's kind of no escape from QE, which was really why Bitcoin was designed after the financial crisis. And I think that's kind of becoming a much more irrefutable fact as we look at, what is an incredibly challenging environment for policymakers today. So there's that part of it. There's also this Russia being removed from SWIFT. Where are your assets? Who has your assets? Do you really own them? Can you lay claim to them no matter what? Which I think is a structural tailwind for bearer assets. And I think that's very top of mind for high net worth individuals. And then you take away from that the second piece, which is structural tailwinds and cyclical headwinds. And there's no question that, inflation and what that means for central bank policy is a significant headwind for crypto assets in the near term. But I think I think people are comfortable to separate, temporary cyclicality with longer term structural tailwinds. And it's funny because one of the big kind of watershed moments, I'd say, in 2020 was in the summer. I think it was probably May or June, when Paul Tudor Jones wrote his kind of famous letter to investors saying, I think this explosion of monetary easing really is going to cause assets to rally quite a lot, and crypto will be the fastest horse. That was a very digestible case to be long crypto for traditional investors. And obviously that argument has now been removed. So I would say people that bought into it simply for that reason are certainly less interested now. But I'd say they'd still probably they won't have forgotten about crypto or have doubts about crypto similarly to what they did in 2018.
Yeah, and that has to be like a reasonably small cohort relative to the broader interest that exists in crypto. Like if you think about, there's macro folks and then just, more broad investors like a Steve Cohen. He's not getting into crypto, for instance, because he sees Bitcoin as this gold-like asset, right? I don't think he cares anything about gold. He sees broader use cases for crypto, its impact on healthcare, finance, etc. So maybe the macro folks have stepped back a bit, but you do have this other cohort of people who are trying to invest in it as a technology, as a call option on the impact that this technology can have across various sectors. But you still have this shaky backdrop, though. I mean, you put it pretty well. If you rewind the clock back to 2020, you had like, Paul Tudor Joneses of the world making this case for Bitcoin to go up in the face of an infusion of money into the system. But now you have a backdrop of 150 basis point US rate hikes, basically priced in across the next 3 Fed meetings. Bitcoin's 30-day correlation to tech stocks is at its highest level since July 2020. And then gold correlation, its 30-day correlation is basically at all-time lows. So what is the case for Bitcoin for the macro person now? Is it sell or at least let some off the table?
Yeah, I think it was quite disappointing for people like myself and probably yourself that do believe in the unique properties of Bitcoin, that it has been so correlated to tech stocks, and also in an environment where it was clear, really because of Russia, that investors were reaching for gold because they wanted a bearer asset that couldn't be taken away from them, that Bitcoin didn't look anything like that really, and just looked much more like a high beta Nasdaq stock. So I would say I have to agree with you that the balance of probabilities is that in the near term, crypto is pretty well correlated to the Nasdaq. But I would say I'd make a few points on that. Firstly, so the crypto market bottomed on January the 22nd this year. If you take crypto market cap versus the Nasdaq is almost bang on flat year to date. It hasn't moved. You could have bought either roughly the same negative return, I believe, of about 10-12% this year, and it's basically the same. But since that January 22nd low, the crypto market cap versus the Nasdaq is up about 25%. So I'd say there has been, while the kind of day-to-day correlations are quite high, there definitely has been kind of an outperformance of crypto in the last, say, 3 months, almost to the day. So that, I think that is some call for optimism. And really, I just, you could compare it to worse markets too. You could compare it to, TLT, the longer dated fixed income ETF. You could compare it to, Chinese equities. You could compare it to European equities. The Nasdaq is not is not the worst thing on the page right now. And I think, that brings me to one of the, things that does make me quite bullish about crypto at the moment is we really are kind of running out of things to buy. I think usually, one of the thesis of traditional investments was, 60-40, equities and bonds, and the bonds protect you in times where the equities draw down. In fact, this year, the bonds have performed even worse than the equity indices in the US. So actually, that's meant that if you look at like a risk parity strategy, it's actually performed worse this Q1 than it did, in March 2020. So it's been an even bigger drawdown. So people, really turned off to bonds. I'd say EM equities are pretty tough. Commodities markets are pretty small. There's just, and while there is a lot of tightening kind of programmed into the market, the money hasn't been taken back yet. The Fed was printing money until I think about, 6 weeks, 2 months ago. They were actually still buying bonds. The ECB are still buying bonds. Japan's buying bonds. China are still easing. Globally. And okay, so the Fed are going to hike 50 in, on May 4th, May 5th meeting. Real rates are still incredibly negative, because it's likely CPI is pretty understated for the normal person, especially the normal, wealthy person, which probably has a bigger, their CPI basket is probably the most important when it comes to how they react to real rates and where they put their money. So they're just, you're just running out of options. And Bitcoin's been kind of steadily I think, grinding up since that late January time. Ethereum, you're looking into the merge where, potentially by the end of the year, you have Ethereum, which, is a deflationary asset and has a, close to 10% yield. That's going to be an asset that people are going to, I think are going to want to own. You can see all the activity around NFTs. It's, there's a lot going on. And I think for most people, the allocations coming into this year were really pretty small. So for there to be an increase, so by the end of the year, do I think, the global monetary kind of supply will be higher or lower? I think it will be lower, but, can crypto assets take a larger piece of that pie? I think absolutely. So
it kind of has to happen, right? Given the amount of capital that has been raised specifically to be deployed into crypto. I mean, effectively, they could sit on it, but it needs to get into the ecosystem, whether it's through, even if it's through equity deals, the capital is recycled. It needs to be deployed, right? If, Framework's coming on the show later today, $400 million. That's not going into real estate, bonds. I mean, obviously that's small compared to the broader market, but that's just one fund. There's several funds in the billions of dollars. That, in my sense, creates some sort of like floor or bid at least some level that maybe doesn't exist in other markets.
Yeah, I mean, I think that's it. I mean, I think the key is is there money coming? So crypto's always been, because it's such a small asset class, I think adoption and the rate of change of growth of the market is the key thing. Macro has an impact on that, but it's, I would say, not the only thing going on. I think allocations to global bonds are going to go down significantly, and those markets are multiples the size of global equities. So a tiny move of that into crypto, creates a big price change. And look, I'd be lying if I'd be saying that we haven't been talking about this for 5 years. But guess what? On a longer term time frame, crypto prices are up a lot, and I kind of feel that the likely trajectory is that kind of longer term allocation trend continues. I mean, one thing like I've been talking about with a bunch of my old contacts from macro is what's happening in Japan at the moment. So firstly, I think people, especially in the US, really often make the mistake of being too US centric. Of course, it's the largest capital market in the world, so it is the most important by definition.
50% of the global stock market.
Yeah.
Pretty big.
Yeah, so no doubt it's the most important, but you sometimes miss if you're just thinking about the strengths of weaknesses of the US. You shouldn't be thinking about them in absolute terms. You should be thinking about them in relative terms. So there was this huge, kind of Twitter explosion about, when Russia got taken off SWIFT, that because the US had now, SWIFT was no longer a neutral settlement layer. It had been weaponized and was now, worth less money because it didn't have that neutral quality anymore. And that led people to say, well, but that's weird because the dollar's going up now. If I think fiat currencies are at risk, the dollar should be going down. I actually think, it's likely to happen in the other direction, where what will cause real problems for fiat currencies is the dollar going up against everything else. For example, a lot of other countries borrow in dollars. So the value of their debt in local currency goes up as the dollar appreciates, which particularly for emerging markets creates big problems. And of course, there are examples of that, through the years. Turkey probably, would be the most recent one. But if you look at what's happening in Japan now, all the, ECB, Fed, all talking about, how quickly are we going to stop buying bonds? How quickly are we going to tighten rates? And the BOJ have said, well, because, their economy has really suffered because of COVID. And they've said, well, actually, we're going to keep buying bonds. We're going to buy an unlimited amount of bonds at a price level. And now the BOJ is like the furthest down QE forever. Like this idea that QE is inescapable, clearly Japan is the one you should be looking at for what's the forward here. So, they own, I don't know what the stats are, I could look them up. I believe they own over half of the JGB market, and I believe they own about 30% of the equity market, and that those numbers are going up. And now, so of course they're having to print more money to do that. So I think in the last, 2 months, the yen has depreciated by about 15% against the dollar. That's a really big move, vol adjusted. And it kind of is like
on a tear, though.
Yeah, exactly. And it's just going to rip through these weaker cases. But guess what these guys are thinking? My central bank just keeps printing and printing and printing and has no way out. Well, hey, maybe crypto, I probably do want to diversify my asset base away from this currency, number one. Where can I get yields? Well, traditional investors, I think, are really struggling to get yield out of crypto so far, but I think they'll get there quite quickly. One of the things FTX Access plans to do is, come up with some good kind of yield baskets for people, to invest in on an ETP, basis, which would that would obviously be outside the US because the US regulations are pretty strict on that front. But yeah, so just those examples, I think are really important, and I think watching this dollar strength as a leading indicator for money into crypto, I think is important.
Having trouble keeping pace with the crypto boom? When your business is scaling up and your portfolio is growing, you don't want to waste precious time on manual treasury management or settling and rebalancing. Fireblocks can handle that for you with smart, scalable solutions for your crypto business, along with industry-leading security and expertise. They'll take care of the back end so you can focus on the big picture. Visit fireblocks.com to learn more. This episode is brought to you by Coinbase Prime, an integrated solution that provides institutional investors with an advanced trading platform, secure custody, and prime services to manage all their crypto assets in one place. Coinbase Prime fully integrates crypto trading and custody on a single platform and gives clients the best all-in pricing in their network using their proprietary smart order router and algorithmic execution. Futuristic companies like Tesla and MicroStrategy have already used Coinbase's comprehensive investing platform to execute some of the largest trades in the industry. Build a unified investment portfolio with one of the most trusted names in crypto. Learn more by visiting coinbase.com/prime to get started today. This episode is brought to you by Cross River. Building the next big thing in crypto? Then it's time to get your fiat on and off ramp solution from Cross River. Whether you're a crypto exchange, NFT marketplace, or wallet, Cross River's integrated API-based platform provides the payment solutions you need to grow. Cross River is powering the future of financial services. A CryptoFin industry award winner and an early partner for companies like Coinbase, Cross River's tech stack supports crypto partners and enables real-time money movement for consumers. Welcome to a new world of crypto-friendly banking. Request your fiat on and off ramp solution now at crossriver.com/crypto. So dollar strength, the sort of amount of capital sitting on the sidelines. What other tailwinds do you see for crypto in this market right now?
So a good tailwind is often an end of a headwind. So, Monday was the day that we all paid Uncle Sam. Interesting that was a local low for most crypto assets. I've thought about this a lot, actually, and it's basically impossible to try and figure out how much gains were realized last year. It's pretty obvious that people with large gains would have dealt with them before tax day, and it would be the smaller retail investors that would be kind of liquidating assets to pay taxes right before. So
you would think,
but the gains also are huge, right? The gains in 2021 in crypto were absolutely astronomical. So there were some big gains to be harvested, and regardless of whether they were or the flow went through or the flow didn't go through, I think it was probably a pretty good reason to not buy until that point. If you were planning to allocate, why not at least wait until something pretty well telegraphed passed? And that's, there's that side of it. I think another side of it is funds that did really well, no doubt have been either distributing assets or having redemptions. And some of the funds that get taken out of liquid crypto vehicles, get reinvested in venture capital crypto vehicles. But I do think there's a bit of a weight on liquid crypto from those kind of redemptions that probably, were quite likely to happen towards the end of last year. Q4 last year, Q1 this year, I think maybe we still had to digest a lot of these. If you think of, the kind of before Bored Apes, the poster child return was probably, there were a few of them, Luna, Solana, I think, Phantom, some of these had these, crazy, almost, 10,000% returns for seed investors. People just have to take that money back. If you're a fund and your fund goes from, at the start of the year being 25 basis points Solana to 50% Solana by the end of the year, you kind of got to change that because it's just not what your investors have kind of expected you to do, and to have the future of your fund based on one asset is probably not your plan. So for some of the winners, I think there was a very natural kind of P&L harvesting. So, and I one of the things I keep coming back to is, living through what was pretty miserable in 2018 is, if 40,000 Bitcoin, 3,000 Ethereum, 100 Solana, if you're telling me that that's the bear market, I'll take it. So,
yeah, right.
Yeah, who knows? That could be, and it may well be that there's just more to be bled out of the market. But it also may be that just this asset class has once again, fallen into the hands of more people, and the ownership has become more diversified, and and we're kind of onwards and upwards within that kind of longer term trend.
What about inflation? How does that impact crypto? And are we going to see more higher CPI prints, or is this sort of, do you think we're kind of at the top there?
Yeah, so I think the inflation question is actually kind of quite simple. I think within the realms of normal inflation, so let's say CPI from 1% to, I don't know, 4%, something like that. I'd say that's contained by central banks. So it's cyclical. As inflation goes up, they rise rates. That's a headwind for crypto, like it is any other asset, because it's it's an asset denominated in money. As it goes down and central banks cut rates, it's positive for assets. And, there'll be a cyclicality to crypto assets from that. But as discussed earlier, potentially the more structural tailwinds are the kind of supercycle thesis. What I'd say is if you get outside of that and you have extremely low inflation or extremely high inflation, I think crypto will do very well. And it's actually that's a kind of a Cathy Woods model of crypto, that either in deflation, where central banks just have to print like we haven't seen anything yet, then of course something like Bitcoin, which has a fixed supply, will be attractive. And then secondly, if inflation goes so high and central banks just kind of give up, and you end up with something like, the Weimar Republic in Germany, where people are wheelbarrowing money, money around to go out for dinner, an asset that has a fixed supply again will be very attractive. So, it's at the extremes, I think, which essentially would mean a failing of central banking. I think it's very positive for crypto. In that like middle range, it's, central banks work fine and they have an influence on all asset prices. That's kind of how I think about those questions. And then on, have we reached peak inflation? Quite possibly. Energy prices are certainly lower now than they were on average for the last month CPI reading. I thought it was interesting, but the supply chain issues are a real problem. I think it's something like 30% of grain is 30 to 40% of grain is created in Russia and Ukraine. So that's obviously a major food issue. And obviously for Europe, all of the gas really comes from Russia. So that's a major issue. You're seeing the big build up at Chinese ports again, because they're experiencing a bigger COVID slowdown. So I'd say, do we know we're through peak inflation? I'm not sure. I'd say possibly, but we have to wait and see. What I would say that was quite interesting is, Vice Chair Brainard gave a speech last week, and she talked actually really clearly about and how important the decline in core inflation was. So headline inflation is everything. Core inflation strips out food and energy. And you might say, well, hey, like stripping out food and energy, like aren't those the things we're worried about? And I think the problem with that is, for the Fed to start tightening based on food and energy prices, that's really like crisis mode, and even more of a crisis than I believe we're in now, because actually food and energy prices going up, those are things people don't really control how much they consume. So that's already having a tightening effect on the economy, on consumption anyway. So it's not really something that they should be trying to or are able to kind of dampen. So, don't get me wrong, the Fed and the ECB are in a really tough spot here.
Yeah.
But I don't think it would take that much kind of bad news on the economic side, especially if that was twinned with inflation starting to tail lower, that they might start changing their tune quite quickly. I think naturally they know the risks of over tightening, but I know that that's not a political message that they can deliver right now, and they don't want to confuse people. They do want financial conditions to tighten. And so that's where we are. I think, I don't know if we're past peak inflation. We're definitely not past peak tightening, because they haven't even started yet.
Yeah.
So we'll find out. One of the things that's interesting about markets is because it's priced in, is that does that actually capture when it happens? We'll see. And I think that's especially challenging when it comes to QE and QT, which is likely to start in June, when they start, reducing the size of the balance sheet. I think people are quite worried that could have a bigger impact.
One victim of this market, or of these market conditions, obviously tech stocks, growth stocks broadly, but the crypto stocks have just like you don't want to be a public company in crypto right now. I'm looking at the Coinbase chart and it's just broken. It's down. We're down about 60% from highs in November. Since the beginning of the year, down about 43, 44%. It's brutal.
Yeah, I think I think they kind of have a one way, they have some probably early investors, and there's probably some liquidity being tapped out of that. Potentially, I think sometimes you make acquisitions in stock. Perhaps those holders think that there's something they can create a higher return with that capital from. I think one of the other things actually that really hurts Coinbase is, I believe by market cap it's the highest holding within the ARK Innovation Fund. So that's really just an ETF. So if you or I buy or sell a unit of ARK, they have to kind of rebalance it to do what they do with the components. So as that has obviously was hugely successful, has been hugely unsuccessful, or the returns have been unsuccessful, that there have obviously been some big outflows, and that's a headwind for their biggest components, of which Coinbase is one. But yeah, I mean, it's actually, I think it's true in most parts of the equity market that there is this divergence between list and private values, mostly because I believe as a venture fund or a private investor, you have much lower volatility on your you don't have the daily mark to market to deal with. So there's a premium that's kind of been allotted to that.
Yeah.
Some of these listed crypto equities definitely seem to be pretty cheap.
So you kind of mentioned this earlier about the quote unquote bear market, if it's going to give us these types of returns in Solana, like, not that bad of a bear market. But where are we? Like, how would you describe this moment in time?
So I would say this moment in time is probably like the most uncertain macro period that I've ever seen. Central banks have gone from 5 years ago being worried about deflation to be worried about inflation now. We've had a pandemic that no one could have foreseen, and the consequences of that have been so far reaching. Not just in market terms, but also in the way we interact with each other. And then the third thing is we're in the middle of a war with one of the so a nuclear power and a country that controls a huge amount of natural resources. So it truly is a very unpredictable time, and I think we've got to a point now where we have priced in a lot of tightening, and the market has taken it. And the market is down a lot, right? I mean, if you think, when did this start? This started when kind of Powell said at the beginning of December that inflation was no longer transitory, and they kind of gave up on that. Really, since that point, fixed income's down a huge amount, equities are down a lot, crypto's down a lot, and I think now we're kind of in that moment of time where the market's asking kind of, is this now enough? Have we found a new equilibrium? Or are we going to really be plunged into a much deeper bear market?
And be watching it. Me, you, and Small Thing.
Exactly. he'll be recording it.
Yeah, he's like our Library of Congress.
exactly. And what a wild this Twitter story as well is completely wild too.
Oh yeah, I was talking to a friend who works there, and she said that it's hard to kind of even work because of all of that. It's just wondering what's going to happen next.
Yeah, I mean, it's wild actually. I was kind of looking through it, and that it's almost, the stock price is like not that dissimilar to where the IPO was. I think like it would still be like a 5 or 6x to get to Facebook's value. And then you just think about it, you're like, I mean, I use it all the time. A ton of really wealthy people use it all the time. Elon Musk's on it. Mark Andreessen's on it, Sam's on it. Like it's just you and I are on it too
Yeah.
to bring down the average. But it's become like such a useful kind of application. I wonder if there was a way to translate this thing into Web3, I think it would be fascinating, really. And I don't know if I think the employee shareholders probably are somewhat frustrated themselves that this could be something could be done better. But a lot of smart people have been trying to figure it out for a long time. So who are we to judge?
Opine. just simple folk. Maybe we can convince Sam to buy it. Maybe.
Yeah, I mean, he likes Twitter a lot. He uses it all the time. So yeah, I'm sure if we could, the issue would be carving out some of his time for it would be
he's got a lot on his plate. Well, John, thanks so much for coming on the show.
Oh man, thanks a lot for having me, Frank. It's been a pleasure.
Yeah, definitely. So again, we've been joined by Jonathan Cheesman over at FTX. John, where can our listeners learn more about what you're doing?
Yeah, so I'd say at the moment, FTX Access's Twitter account, FTX_Access, provides information about the markets, observations about the markets rather than any investment advice, and also news about FTX and the products that we're bringing out. The FTX Access research website, the community blog that we're building, will hopefully be ready in the next month or so. So that should be, a pretty cool thing for people to use, and it will be free to use. So yeah, we'd like to spread as many good ideas and get as much kind of intelligent conversation as we can.
Parfait. Great seeing you.
Cool. Thanks a lot, Frank.
Ladies and gentlemen, we'll be back with you again with another great guest. Have an awesome day. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.